Hi there, welcome to Kneppy Invest. I have featured WRKR, the company that I'll be focusing on in today's video, briefly in another video a few months ago, but I thought I'd touch upon this company again because they were operating cash flow positive for the December quarter, and things are looking pretty good for this company, WRKR, WRKR. So let's get stuck into it. Before we have a look at the December quarter results, let's see what this company actually does. WRKR is a RegTech company. I'm assuming that reg means regulation because this company deals with worker compliance, and tech means technology. So they combine regulations with technology, hence RegTech. And because they deal with worker compliance, and what they do is they deal with worker compliance through the whole life cycle of a worker, from hire to retire. So this company is beneficial for Australian workers, employers, advisors, and financial service providers. And to be fair with WRKR, this company has gone through a lot over the past 2 years, including a merger, transformation, new board, a new CEO, and really changing the way this company works. And at this point in time, it looks like all these changes that the company has made over the past 21 months has been successful just based off the growth in receipts and the fact that this company is now operating cash flow positive. Maybe only for one quarter, but it's a step in the right direction. Now, WRKR's journey really started with another company called Integrated Payment Technology, I think it was called, ticker code IP1. That company actually IPO'd on the ASX in 2016. And then in the start of 2021, and 2020, that company merged with another company called Comply Path, and then that merged entity became WRKR. And then during 2021, there was a renewal of the board, a new CEO and executive team, and there was a lot of other changes that new CEO and that new board brought to this company. So at this point in time, I am thinking pretty highly about the new CEO and that board, just because it does look like these changes they made could be successful. Now, I won't call it just yet that it is successful. I'm just saying it could be successful and it is looking good for the company. I've already been through the first two here. So WRKR as Integrated Payment Technology are listed on the ASX in December 2016, and they merged together, and then WRKR was spun out, or not spun out, but that merged entity became WRKR in 2021 or 22. Current CEO is Trent Lund. He owns 33% of the company, so definite skin in the game. A lot of investors out there look for skin in the game, significant skin in the game, because they believe when a CEO or even a founder of a company has a significant financial incentive to make the company grow, there's a better chance the company will grow in the long term. Now, one of the other biggest shareholders is GJB Consulting. They own 20.4%. So combined, Trent Lund and GJB Consulting own 53% of the company. So one negative thing about that is the shares are illiquidly traded. But at a share price of 2.4 cents, the market cap is 31 million. Now, I just had a look at the share price right now, and one of the problems about a company being highly illiquid is sometimes you will see rapid rises in the share price. And in fact, today the share price was 2.9 cents, up 20% on very few shares traded, just because the shares are highly liquid. And if someone wants to buy some shares in this company, sometimes they will have to raise the share price by 20%. And the ticker for this company could be anything else other than WRK. Before we have a look at WRKR's December quarter results for financial year 23, that was the whole motivating force for me doing this video today. Let's go back 1 year, because I want to see how this company has progressed over the past year. So 1 year ago, receipts at Cusp was $963,000. And more than likely, I saw this particular Appendix 4C and I didn't look much into it. Didn't look much into the company because they were operating cash flow negative by $690,000. And they only had $1.2 million of cash at this point in time. So more than likely, they would need to do a capital raising. So more than likely, I saw this Appendix 4C and went to the next one. And I didn't think twice about this company. But then I saw WRKR's December quarter results for financial year 23, and this did interest me to do a little bit more research on this company. So receipts to customers up to $1.7 million, so up $770,000 from last year. And when you look at their cost increases from 1 year ago, we don't see much increases in their costs. So product manufacturing and operating costs up 40,000, advertising and marketing up 40,000, staff costs up $100,000. So potentially this company has found a little bit of scale where receipts are climbing at a significant greater rate than their costs. And that's why the company is now operating cash flow positive by 153,000. Now, that also includes government grants and tax incentives. If you take that away, also if you take away the interest received, this company would be slightly operating cash flow negative. But they were positive for this year, and for the first 6 months of the year, they're only operating cash flow negative by 205,000. Now, they don't have any problems with cash on hand. Right now, they have $5 million of cash on hand. They also have $3.3 million of debt, and I would like to see that debt not climbing from here on in. I don't like companies like this, small companies like WRKR, to have too much debt on their hands. One thing I look for in every single company is whether receipts or revenue are climbing through time. And from the start of 2021, since they went through this transformation, receipts are going in the right direction, because before that, receipts were going nowhere. So it seems like all these changes that companies' new management and CEO have made are being successful. So receipts have risen from 342,000 to 1.7 million. And in fact, receipts have a nice trend line up. Now, receipts don't go up every single quarter. We have seen a couple of quarters where receipts have fallen from the previous one, but the trend is definitely there. But the market isn't that interested in this company just yet, even though they were operating cash flow positive for the December quarter. And in fact, the share price has fallen a lot from when their IP1 listed on the ASX back in 2016. Back then, the share price actually reached a high of almost 16 cents. And then during 2017 and 2018, share price fell from 16 cents all the way down to 1 cent. So hopefully you were not a shareholder during that period of time. And then they went through that transformation back in 2021, and really the share price has done nothing since then. So even though receipts are climbing at a nice rate since they went through this transformation, share price and the market hasn't really noticed this company just yet. But if WRKR can increase their operating cash flow, if they can remain operating cash flow positive, free cash flow positive, I think eventually the market will take notice, and that's when you will see the share price starting to rise. That's all I have for this video, looking at WRKR and their December quarter results for financial year 23. I'm pretty sure this company is pronounced as WRKR because that makes sense. Even though there's no vowels in the name, WRKR, it just makes sense it would be pronounced WRKR when they're dealing with compliance for Australian workers. Anyway, if you have any questions, any thoughts, if you're a shareholder of this company, I'd love to hear your thoughts about why you're a shareholder of WRKR. So leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.